Good afternoon, everyone. I am C. Ankit Sharma, your income tax faculty for the session. So today we will be discussing the provision regarding return filing and self-assessment tax. So till now we have covered from chapter number 1 till chapter number 7, and this is our 8th chapter, or we can say 8th unit. And after this, the last topic would be computation of total income and tax thereon. So we are going to discuss chapter number 8, in which all provisions are like theoretically. The majority portion of this chapter is of course theoretically, in which we will discuss how to file an income tax return, what are the due dates, what are the last date, the specified form, the specified procedure we have to follow, then the transparency provision regarding the PAN number, regarding the Aadhaar card, Aadhaar and PAN linkage, and tax return prepare scheme. So these are some provision what we are going to discuss in detail in today's class. Before that, I welcome you all. Namaskar, Suprabhat, Sat Sri Akal, Vanakkam, good afternoon. So Lari Madroju, good afternoon. Nanda Gopal, good afternoon. Manvi, Kasak, Vedehi, good to see you all again. Anshika is asking, good afternoon, sir. My doubt reduction chapter, test your knowledge question number 3. Okay, Anshika. Neeru, Ragini, Preeti, Sai Kumar, good afternoon from Andhra Pradesh. Okay. So, Sania, Hardik, Rashmi, Vaikunta, Kambeshwari. Everyone, a very, very good afternoon. I welcome you all. So there was a query from Anshika from deduction topic. So Anshika, please let me know what you want to ask in this. I guess you're talking about this question number 3, and there is short-term capital gain, which has been given over here, 58,000 rupees. I hope you want to ask regarding this. So please ask what you want to know about this query, Anshika. I will explain. Maybe your query should be regarding the HCCG point, that why deduction has been claimed from this point. So let me tell you, this short-term capital gain is not the part of short-term capital gain under section 111A. This is not section 111A capital gain. This is normal short-term capital gain, and for the purpose of deduction and the calculation of tax, this will form part of our normal income. So on this income, normal tax rate as per slab rate has been imposed. And of course, deduction could also be claimed, because this short-term capital gain is not section 111A. This is not a special rate of short-term capital gain. This is a normal short-term capital gain. So normal short-term capital gain falls part of your normal income, on which you can charge tax as per slab rate. You can claim deductions also. So might be in the solution form you are thinking, where is the special rate of tax? That is 15% on this. So there would not be any 15% tax. This will be included with the normal income of assessee. For Mr. Chaturvedi, question has been given. His income was 818,240, which include capital gain 245, having a special rate. So out of this 8,18,240, 245 is going to be taxed as per special rate of tax. Balance will include this short-term capital gain also, and it is going to be charged with normal rate of tax. I hope it's clear. This might be your issue, because you might be thinking, where is the special rate for capital gain has not been imposed in 58,000. So this is the part of your normal slab rate of income. Clear? Okay, so okay sir, clear, thank you. Done. Now Harshdeep Kaur is asking, sir, interest rate on section 234C is 1% or 3%? Look, Harshpreet, if you default on 15th of June, then the rate is 3%. So for first 3 installment, whatever the amount, the short amount is there, the rate would be 3% fixed. If that is a shortfall on 15th of June, 15th of September, 15th of December, then you have to apply 3%, fixed 3%. Not monthly, it's 3% rate you have to impose for the calculation of section 234C interest. But if the default is on last installment, that's on 15th March, then rate is 1%. So 3% rate is for first 3 installment, And for the last installment, the rate is 1%. Clear, Arshpreet? Okay, Ms. Divya S, good afternoon to you also. So today we will discuss chapter number 8. Before that, of course, as usual, there is going to be a thought for the day. And I always believe in this. The thought says, if hard work is your weapon, success will be your slave. Very correctly said, of course, because I always say in my all quotations, all thought for the day, I never consider intelligence over hard work. I always think if you are a hard worker, if you have a certain kind of discipline, if you are ready to sacrifice, if you're ready to do hard work, there's nothing is impossible. So being intelligent could be another asset, another privilege, another virtue of your personality. But I believe hard work is always prevail over your intelligence. So if you are ready to do hard work, success, whatever you want to achieve in your life, you can get it. You have to do hard work with a specific strategy, planning, and of course, discipline also required. So the whatever you want to achieve in your life, you will get it later or sooner. Clear? So that was the thought for the day for all of you. Pallavi, good afternoon. Dinesh, good afternoon. Dilip, good afternoon. Okay. Now we are going to discuss chapter number 8, or we can say unit number 8, that is for provision for filing return of income and self-assessment tax. Before that, let me discuss with you this provision or this format. Till now, we have covered chapter 1 to chapter 7. That is started from basic concept, then residential status, then heads of income like salary, PGBP, capital gain, etc., etc. Then you must have gone through with the provisions of clubbing and set-off and deductions and TDS. So after that 1 to 7 units, one chapter which is regarding calculation of total income and tax liability, in which all these calculation will be summarized in a single topic, total income and tax liability. So that is from unit 1 to 7 and unit number 9 part. From the assessee point of view, we have to calculate a specific tax liability, and we have to discuss concept of income tax, what is capital receipt, revenue receipt, what is income tax, etc., etc. So we have covered all these topics except chapter number 9, which is going to be the last topic for your syllabus. Now chapter number 8 actually going to explain, there is no calculation part in chapter number 8 technically. Whatever you have done from chapter 1 to 7 and chapter number 9, you have to present that information to the income tax department in a specific format at the specified time with a specific provision need to be followed. So that is technically, this chapter belongs to the declaration of liability part, that whatever calculation you have done, or your consultant or your CA or your financial consultant has been done on behalf of assessee. So whatever we have calculated, whatever income we have calculated under different heads of income or clubbing provision or TDS or advance tax or etc., etc. So the all calculation, the whole amount we have calculated, we have to present that information to the income tax department. So that is chapter 8 going to explain that whatever information you have calculated, whatever tax liability you have calculated, you have to present, or you have to declare that liability to the income tax department. How you need to disclose, in which form, in which format, on which dates, what are the last date, what are the consequences of not submitting it, what are the consequences of submitting it on the due date, what are the consequences on submitted on the last date, etc., etc. That is going to be discussed in chapter number 8. So after submission of these things, then department assess this information what we have submitted to the department. So this is called declaration of liability. And then when we submit these information to the department, then department assess those declaration of liability submitted by the assessee. That is called assessment. So we called it assessment of liability. So these two parts is from the point of view of assessee. All the calculation and the declaration of liability needs to be done by the assessee, and the assessment is needs to be done by the department itself. And this topic of assessment is going to be covered at final level. We are scrutiny assessment or regular assessment. We are having best judgment assessment. We are having income escaping assessment, etc. That is going to be the part of your final syllabus. So we have to cover till over here. But the second stage of this declaration of liability part is assessment of liability. That is not included in your syllabus. So we are going to discuss the return filing procedure, the format, the due dates, the last date, the interest, the penalties, the benefit, the advantages, the disadvantages for filing these return at a specified date at a specified time. Who are going to file return of income? Even if it's not compulsory that you are having certain kind of income, and you have to file your return of income. That is not mandatory. So if there is no income, there would not be any return filing liability. Even if you have some income, but it's still possible that you are not need to file your return of income, etc. So those all provisions are going to be discussed in today's session. So today we have to complete the chapter as well as the test your knowledge question and the MCQs also. So one by one, we are going to discuss all these topics. First of all, we are starting with the provisions. Provision for filing return of income and self-assessment tax. So these are the income tax return filing provision. What we are going to discuss. Chapter overview. The chapter is going to explain us regarding filing of return, interest and fee for default in furnishing of return, and other provision. Those are related to submission of PAN number, Aadhaar and PAN linking, and tax return preparement scheme. So we are having compulsory filing of return. Those need to file the return of income compulsory, return of loss, belated return, revised return, and of course a new concept of updated return. Not as new now because that has been inserted 3-4 years back. So one by one, first of all, we have to understand what this chapter is consisting. So as I explained to you, it consisting the declaration part of your all liability, what you have calculated from chapter 1 to 7 and chapter 9. Income Tax Act 1961 contains provision for filing of return of income. Return of income is the format in which assessee furnish information. Assessee furnish information as self-declaration regarding its total income and tax payable. So this is what we are discussing from unit number 1 to 7 and unit number 9 also. And on the basis of that, we have to file our return of income. Different assessee is notified by the CBDT. The particulars of income earned under different heads, your gross total income, your deduction, your gross total income, your total income, and tax by the assessee are generally required to be furnished in a return of income. In short, we can say the return of income is the declaration of income and tax by the assessee in the prescribed format at a prescribed date, etc. So the good thing is it's a theoretical concept, nothing numerical in this chapter. And one more good thing is it is also important from the point of view of examination. So do not think that it's a theoretical chapter, so that is not that important. Of course, the question is going to be framed from these topics also. So first of all, we have to understand compulsory filing of return of income. So in our country, under section 139, it explains who needs to submit their return of income compulsorily. So section 139(1) says for companies and firm. So if you are a company or if you are a firm, partnership firm, to file a return of income or loss for every previous year on or before the due date in the prescribed form. So for a company and a firm, it is mandatory to file a return of income whether you are having income or loss. Clear? In case of person other than a company or a firm, filing of return of income on or before the due date is mandatory if his total income, we have to check that total income or the total income of any other person in respect of which he is assessable. So if you are a deemed assessee of someone, like you have a minor child, if his income exceeds a certain level, then you will be called the person who is assessable on behalf of that minor child. So if your income or the person on whose behalf you are going to file the return of income if the income exceed the basic exemption limit. So if your total income exceed the basic exemption limit, you have to file the return of income, either for yourself or for any other person in respect of which you are assessable in this act. So if the basic exemption limit exceed, you have to file your income tax return. And we are talking about the total income, not about the GTI. But there is also another provision has been inserted. So till now, a company or a firm always required to file income tax return. Other than a company and a firm need to file income tax return if the total income exceed the basic exemption limit. Clear? One more new point has been inserted which says every person being a resident, and which resident? Resident and ordinary resident, other than not ordinary resident. So that means who has been included? Resident and ordinary resident. In India, within the meaning of section 6.6, what we have already discussed in residential status topic, who's not required to furnish a return of income. Now the provision says if you are a resident and ordinary resident, but you does not fall in point number 1 or 2 as above. That means your income does not exceed the basic exemption limit. But still, you need to file your income tax return if you satisfy condition number 1 or condition number 2. So if you are going to satisfy condition number either A or B, you also require to file return of income even if you are not covered in above points. Would be required to file a return of income or loss for the previous year, whether you have a loss or profit, verified in the prescribed manner on or before the due date if such person at any time during the previous year, at any time, if in the full financial year, at any time of that financial year, if you hold as a beneficial owner or otherwise any asset outside India. So if you are a beneficial owner or otherwise of any asset which is located outside India, then you have to file your income tax return in India. So either you are the beneficial owner or having a signing authority in any account located outside India. So if you have any property outside India, or if you are having a bank account outside India in which you are having the signing authority, then whether your income exceeds basic exemption limit or not exceeding basic exemption limit, you need to file your return of income. Or is a beneficiary of any asset located outside India. So if you are a beneficial owner of any asset outside India, or you are a beneficiary of any asset outside India, you have to file your income tax return in India. Clear? So till now we can say if you are a company or a firm, you are having income or loss, you have to file your income tax return. Clear? Other than company, etc., if your total income exceed basic exemption limit, you have to file your income tax return. Clear? Now, if you are a resident and ordinary resident and does not satisfy above condition, then you also have to file your income tax return if you are a beneficial owner outside India of any asset or having a signing authority, or you are a beneficiary of any asset outside India. So definition of beneficial owner, beneficiary has been specified over here. Again, the all provision we discussed has been summarized over here in a very specific, wonderful drafted format also. We already discussed these provisions. Now there are more cases. It is not completed yet. The compulsory return filing provision not yet completed. The point number 4 is there. Now it says, further every person being an individual or HUF or AOP or BOI, whether incorporated or not, or artificial judicial person, whose total income or the total income of any other person in respect of which he is assessable under that. Abhi upar, what was written over there, that if your total income exceeding the basic exemption limit, now that limit has been, we can say a new limit has been inserted also. That was total income, not GTI. But now the provision has been amended. It says if your total income before giving the effect of, without giving effect to the provision of chapter 6A deduction. That means all deduction need to be added if it has been deducted, or exemption under section 54, 54B, 54D, 54EC, or 54F. If it happened, all the deductions or all the exemptions of capital gain, even if after adding this value, if this income exceed the basic exemption limit, then you also required to file your income tax return. The provision says, point number second was saying, if your total income exceeding basic exemption limit, you have to file your income tax return. Clear? Now this point actually changed the scenario, that in case of individual HUF, AOP, BOI or AJP, if your total income after adding deduction, so क्या बन गया ये GTI technically, after adding a deduction, what it will be called, it would be your GTI and not stopped over here. If you have claimed any exemption of capital gain, then add those exemption also in the GTI. And after adding, if this exceed your basic exemption limit, then you also have to file your return of income. So technically, in my opinion, that point number second is now irrelevant, because after adding deduction, so this limit would always be higher than point number 2 limit. So it has been inserted a new point, and it says is required to file return of income of such other person or on before the due date in the prescribed form and manner, and setting for the particulars as given. Now they are explaining what is the basic exemption limit. We have already discussed in chapter number 1 for default tax regime. The basic exemption limit is 3 lakh rupees. This amount denotes the level of total income which is arrived after, and under default tax regime only 3 deductions are allowed. So you have to add back these 3 deductions and the exemption if any has been claimed. And after adding these deduction and exemption, if the income exceeding 3 lakh rupees, then you have to file your income tax return. Same in case of optional tax regime, we are having 3 basic exemption limit: 2,50,000, 3 lakh rupees, and 5 lakh rupees. So as the case may be, you have to add back the deduction and the exemption has been specified, and after adding, if exceeding 250 or 3 or 5 lakh, you have to file your income tax return. Not yet completed. So we have discussed 4 points of compulsory filing of ITR, but it has not been completed yet. We have more points to cover. It says any person other than a company or a firm who is not required to file or furnish a return under section 139(1) is required to file income tax return in the prescribed form and manner. If such person, there are certain more conditions. If you fulfill any of these A, B, C or D point, so whether you are covered under above point 1 to 4 or not, you have to file your income tax return. If has deposited an amount or aggregate of amount exceeding 1 crore in one or more current account, you have to file your income tax return. Has incurred expenditure on foreign travel exceeding 2 lakh rupees expenditure on travel to foreign, again you have to file your income tax return. Has incurred expenditure on consumption of electricity of 1 lakh rupees, more than 1 lakh rupees in a financial year, then again you have to file your income tax return or other condition as specified. So it's not yet completed. Some other condition also specified by the income tax department. Here are other conditions. We are having some other condition also. If your total sale turnover or gross asset, as the case may be, in the business exceeding 60 lakh in the previous year, you have to file your income tax return. If your gross receipt from a profession is exceeding 10 lakh rupees, you have to file your income tax return. If the aggregate of TDS or TCS during the previous year, in the case of a person exceeding 25,000 or more, then you have to file your income tax return. In case of resident individual, the amount will be up to 50,000. In respect of 25,000, it would be 50,000. So if you are a senior citizen, then you have to file your return if your TDS or TCS is exceeding 50,000. The deposit in one or more saving account if exceeding 50 lakh rupees or more during the previous year. So now we can say that compulsory filing of return provision has been completed. So if you fall under any of the above point number 1 till point number 5, any condition or subcondition is fulfilled by you, then you have to file your income tax return. Clear? So all those have been covered from point number 1 to 5. Have to file your return before the due date, furnishing a return of his income or other particular as may be prescribed in a prescribed or verified manner with the prescribed particulars what we required under Income Tax Act. So that was those regarding those person who required to file your income tax return. So if any person comes to you now, and if he wants to ask, if any of relative, your friend or your known, anyone comes to you and asks whether do I need to file an income tax return? Is it mandatory for me to file an income tax return? Look, a lot of people think that if they are having PAN number, if they are having a permanent account number, so they should file their income tax return. So you understand my question? So is there any point including in above these point which says that if you are having a PAN number, you have to file an income tax return? So there is a very big confusion regarding this. A lot of people think that if they are having a PAN number, they have to file an income tax return. So now you know, if only you are falling under of any of these points from point number 1 to point number 5, only in this case you are compulsory to file a return. You can even file a voluntary return, but compulsory is only required when you fulfill any of these conditions. So now the answer would be no. If somebody asking you that I have a PAN number, do I need to file a return? Your answer would be no. Nanda Gopal wants to ask something. Yes, Nanda, what you want to ask? Sir, I have a small query. You can ask Nanda, sorry, if I am pronouncing correct. Nayan Patil, if I deposit 1 crore in saving bank account, of course you need to file, even exceeding 50 lakh, you have to file a return. So if that limit has been exceeding 1 crore, you have to file an income tax return. Larry is asking, sir, only if once they are liable to pay income tax as per point number 1 to 5, next time if he is not liable, then also he should pay tax. Look, we are not discussing about paying tax levy. We are discussing about filing of return. So might be you want to ask that somebody has fallen in point number 1 to 5 for filing of return of income for this previous year. Then even if he does not fall in the next year in any of these points, either he is liable to file return of income, the answer is no. Income tax is basically on every previous year and assessment year case. So technically, if you file your return of income tax in this previous year because you have fallen above these points, then it is not mandatory that you need to file your income tax return for every year. No. In the next year, if you does not fall in these category, you need not to file your income tax return. Nanda is asking in compulsory filing, however, an individual, what is individual? Let's see. However, an individual being a beneficiary of an asset located outside India would not be required to file return of income under this clause. It says if you are a beneficiary in point number B, then you need not to file your income tax return if the income which has been generated from that asset, if the income for which you are a beneficiary, you are not a beneficial owner, you are a beneficiary. Suppose Mr. B is the beneficiary of any asset, not a beneficial owner. So generally point B says that you have to file your income tax return if this asset is outside India. Clear? Now it says if the income from this property has been included in the income of the beneficial owner. Suppose the beneficial owner of this property is Mr. A. B is the beneficiary and Mr. A is the beneficial owner. So if any income which has been generated from this property on which Mr. A is liable to pay tax or has been filing income tax return, then Mr. B need not to file income tax return even if he is a beneficiary. So point number B is explaining this thing. If you can say any arising from such asset, if any income arising from such asset is included in the income of the person who is including point number A. That means if you are a beneficiary of any asset, but if the income of that asset has been included already in the income of the beneficial owner of that asset, then beneficiary not required to file income tax return. Okay. Yes, Larry, paying tax and filing return are two different things. Yes, exactly. Paying tax is a different thing and filing of return is a different liability. So it's not uh, possible. It's not simultaneously that if I need to file my income tax return, then I need to pay tax also. Suppose my income is 4 lakh rupees. So I am crossing the basic exemption limit of 2,50,000. So I need to file the income tax return. But up to 5 lakh, I would have a rebate also. So tax liability could be nil. So again, this is not a concept that even if you are filing return, the tax payment is mandatory. No, they are two separate cases. Return filing and tax payment could be different cases. But yes, we can say if there is a tax liability, then you have to file your income tax return. Okay. Filing of return, Abhishek Mishra. Yes, exactly. Declaration of your income and your tax liability. Now we are covering on the due date. So there are two kinds of dates. One is called due date and one is going to be last date. Both are different. So due date means if you file your income tax return on due date, then you need not to pay any penalty for delay of filing, of course, no interest for delay of filing, of course, and you will have some other benefit also like carry forward of losses, etc. Might be you must have remembered that in chapter set off and carry forward of losses, there will be a section which says if you want to carry forward your losses, maybe section 80 is there, which says that if you want to carry forward your losses, then you have to file your income tax return under section 139(1). So if you file your return under section 139(1) due date, then you can carry forward the losses also. So if you file your income tax return till due date, so due date is the best date till which you do not need to pay any penalty or fine for late filing, of course, because you are filing it on due date. No interest under section 234A. Under TDS advanced tax provision, we have discussed interest under section 234B and 34C. Section 234A was not there. 234A is for not filing your income tax return up to due date. So you need not to pay any interest under section 234A. This is also a benefit, and of course carry forward of losses, etc. So you have certain benefits if you file your income tax return on due date. Now what are the due dates? So it says it would be 31st October of the assessment year. So you are on previous year 24-25. Your assessment year is 25-26. So 31st October 2025 would be the due date for following category of persons. So if you fall in category A, B or C, the due date would be 31st of October. So if you are a company, the due date would be 31st October. If you are a person other than a company whose accounts are required to be audited under the Income Tax Act or under any other law for the time being in force. So if your books of accounts require audit under income tax or under any other act, then again the date would be 31st of October. Point number C, if you are a partner of a firm whose accounts are required to be audited. If you are a partner of a firm whose accounts are required to be audited. So suppose in a partnership firm of X, Y, Z and company. Clear? X, Y, Z and company accounts required to be audited. Suppose. So X, Y, Z and company accounts required to be audited. So X, Y, Z and company ITR need to be filed up to 31st of October as per point number B, because X, Y, Z and company books of accounts required to be audited. So X, Y, Z will fall in the category of this point. Clear? But all the partners of X, Y, Z and company, X, Y, Z company books of accounts required to be audited, not the books of accounts of individual partners, not required to be even audited. A, B, C are the partners. So their books of accounts not required to be audited. Only XYZ company's books of account required to be audited. So the ITR date for XYZ and company partnership firm is 31st October as per point number B. But as per point number C, the return filing date for all the partners of a firm or any organization whose accounts are required to be audited also automatically would be 31st of October. So the even ABC does not require to audit their books of accounts individually, but because their partnership firm books of accounts is going to be audited, so the date would be exactly same for filing of ITR for the partners as well as the partnership firm. Clear? This is a very important point. 30th November would be the date for those assessee, those fall under section 92E. So 92 is for international transaction, etc. Transfer pricing provision that is going to be discussed in detail under international taxation, etc. in final level. So if you fall under section 92E, those assessee need to file a report under section 92E. The date is 30th November 2025. For all other assessee, the date would be 31st July of the assessment year. That means 31st July 2025. So can you give me an example for those assessee, those does not fall in point number 1 and 2? Who will be covered in 31st July due date? Can you give me an example of 2 or 3 points? Hardik is saying salaried employees, of course, the salaried person. They would be, of course, part of 31st of July. Any person who does not have any business income. So if you do not have any business income, you will, of course, going to be the part of 31st July case. Even if you are having business income, but that does not fall for audit case, that is also going to be the part of 31st of July. So if there is a question in which the question asks that what should be the due date for that person, so you have to check whether that person falls in category 1 or 2 or not. If he does not fall in category 1 or 2, automatically he would be the part of 31st July due date. Okay. So you need not to find out whether he's falling in 31st of July or not. You just need to check vice versa, opposite direction, that whether he falls in 31st October date or not. Clear? 92 is a specialized provision going to be discussed at final level. Clear? Now illustration 1, Paras age 55 year is a resident of India. During financial year 24-25, interest of 2,88,000 was credited to his non-resident external account with SBI. 30,000 being interest on fixed deposit with SBI was credited to his saving bank account during this period. So this is his interest on non-resident external account, which is technically is going to be exempted, and left with 30,000 being interest on FDR and 3,000 on saving bank account. So if this is going to be exempted, then the total income of Paras would be 33,000. What will be your answer if he has incurred 3 lakh as travel expenditure of self and spouse to US to stay with his married daughter for the some time? So if he has expenditure more than 2 lakh rupees, then need to file ITR. We already know this provision. So for this case, the answer would be yes, he has to file his ITR. But for the above case, when his income is only 33,000, which is less than the basic exemption limit, under default tax regime or under optional tax regime. So he is not required to file income tax return. And there is one exemption also. If this 2,88,000 is not exempted, then what would be the situation? We are having the solution of this. You can see this. So what is going to be his income? You can see this is going to be exempted. Interest on 33,000, 3,000. If he is under default tax regime, there would not be any deduction. And because there is not any deduction in that situation, so you can see in this case, because the limit would be 33,000 only, so he does not need to file any income tax return. Let me open this sheet again, students. Once. Just give me a minute. We were on the example. Okay. In PDF file. Just a minute. I guess this will work properly. We were discussing the example that was over here. So the provision was that if the income is 30,000 and interest on saving account is 3,000, the total income would be 33,000 and there would not be any liability to file income tax return. Even if this is the case of optional tax regime, then we will claim deduction also and the income would not exceed the basic exemption limit. So there would not be any liability to file income tax return in this scenario also. Since the total income of Paras does not exceed, suppose in the above case, in the above solution, suppose the interest of 2,88,000 earned from non-resident account has been taken as exempt on the exemption that Mr. Paras are resident. We have assumed that this interest is exempted and RBI has been permitted for such kind of exemption. However, suppose if we assume that this is not exempted, in this situation, his income would be 3,21,000, which is higher than the basic exemption limit of 3 lakh rupees or 250, as the case may be. Then he needs to file income tax return under default tax regime as well as under optional tax regime. Clear? Let me open that sheet again, because in that sheet I have marked a lot. That was the example we have discussed. Clear. So now a specified class or classes of person to be exempted. So some specified classes of person has been exempted from filing of return income. So those has been specified. Government can specify any person. So those are the person. Those have been exempted from filing of income tax return. Clear? Next is section 139(3), and that is very, very important. That is return of loss. And this provision might you have encountered when you were discussing the provisions of set off of losses. And the provision says this section requires the assessee to file a return of loss in the same manner as in the case of return of income within the time allowed under section 139(1). And as I told you, section 80 talks about it under set off and carry forward provision. And it specifically says that if you want to carry forward some specific losses, except losses under that income from house property, then you have to file income tax return, that we can say return of loss, as per due date specified under section 139(1). That means if the date is applicable on you is 31st October, then you have to file it up to 31st of October. If that is 31st of July, then you have to file your return up to 31st of July if you want to carry forward the return of the losses what you have incurred. So for that purpose, you have to submit your income tax return up to due date. So the business loss if you want to carry forward, speculation loss you want to carry forward, losses from speculation business, losses in that capital gain, losses from the activity of owning and maintaining resources, then you have to file your income tax return. That means the return of loss under section 139(3) up to due date as specified above. Only the house property loss is having the special category that you can carry forward even if you file return of loss after the due date. So point number 4 says that loss under that house property under section 71B and unabsorbed depreciation, that could be carried forward and set off in the future year even if you have not filed return up to due date. Clear? Now that was the date what we were discussing was not the last date. The date we discussed was the due date for filing of return of income. So due date is having certain advantages that you need not to pay any interest under section 234A. You need not to pay any penalty or fees as required to be paid by you. So if you file return on due date under section 139(1), you are having certain advantages, but this is not the last date, like the date of 31st October, 30th November or 31st July. These are due dates having certain benefits like no interest under section 234A, no late fees. The late fees could be 1,000 or 5,000. We are going to discuss it later in this chapter. Carry forward of losses. This is the very big advantage if you file your return up to due date. But this is the due date, not the last date. The last date for filing of return is 31st December of the assessment year. That would be 31st December 2025. So if you file any return after due date up to last date, if you file any return after due date but up to last date, that is going to be called either belated return, or if you revise it, if you revise either the original return or belated, it will be called revised return. So either you need to file belated or revise. The last date would be 31st December 2025. So any return which is going to be filed after due date but up to the last date would be called, if it is filed first time without filing any return before, it would be called belated return. If the return has been already filed up to due date and you want to change it due to some omission, mistake, etc., that would be called revised return. If you filed a belated return, it can again be revised. There is no issue on revision of either belated return or original return. But the last date would be 31st December 2025, and would be some disadvantage. There would be interest under section 234A. There could be fees, which could be 1,000 or 5,000, and the losses you cannot carry forward except income from house property and unabsorbed depreciation. Lahari is asking, sir, what about the rebate under section 87A? Lahari, what is this question in this scenario? What do you mean by rebate? Rebate is for tax liability. And for the purpose of filing of return, we need to seek the total income, not the tax liability. So if total income is exempted, exceeding the basic exemption limit, you have to file your income tax return. As I said, paying tax and filing returns are two separate provisions. B. Sai Kiran Kumar is asking, sir, if he is having NRE account, he might be in foreign country, maintained in foreign bank account there, then what is result? So if that interest is, if he is a non-resident, he is outside India, then why he need to file income tax return in India? So income tax return need to be filed if you have any income which is taxable in India, Mr. Sai Kiran. So if in your question, if that person in an NRE account, so that means he's a non-resident. If he's maintaining a bank account there, if he's receiving interest there, so that interest is not going to be chargeable in India in any case. That 2,88,000 is not an income arise in India, not even received in India. And if you are a non-resident, so that income is not going to be even counted for the income in his hand. So that 2,88,000 is having no effect. In that situation, his income is only 33,000. Again, he is not required to file return of income in this scenario. Moving ahead. Income from house property and unabsorbed depreciation both is filed after due date, even if you can carry forward them. That is allowed. Sir, why 288 was exempted in India? The asset was resident because there is an exemption also. If you are having a non-resident external account in India, then the interest on that account is exempted. You have to refer income from other source chapter in which the non-resident external rupees account interest exemption has been given there. Why loss return filed? Because you need to carry forward the loss. If you will not file your loss return, then those loss are going to be dead loss, Rashmi. In that case, you are not able to carry forward that loss. And if you are not able to carry forward those losses, that would be a really, you can say, disadvantage for you, because in next year, suppose you have income of 10 lakh rupees and current year you are having loss of 8 lakh rupees. So if you are not going to file return of loss, then these losses cannot be carried forward. So you have to pay tax in next year upon 10 lakh. If you file return of loss, these losses will be carried forward. And your net income would be only 2 lakh rupees, which is less than your taxable limit. So there would not be any tax. So filing of return of loss is for your benefit. If you choose not to file your return of loss, that is your loss, not the loss of income tax department. So you should file return of loss always. This will decrease your tax liability in future years. Now, belated return. So if return has not been filed up to due date, but if filed after due date up to the last date, that would be called a belated return. Any person who not furnished a return within the time allowed to him under section 139(1) may furnish the return for any previous year at any time, but before the 3 months prior to the end of the relevant assessment year, that means up to 31st December, or before completion of assessment, whichever is earlier. So the date is 31st March 25, but suppose you did not file your return of income up to 31st of July. Suppose your due date was 31st of July. So you can file that return up to 31st of December, but if assessment has been completed by the department, you can file that return before the completion of the assessment by the department. Suppose this was the scenario. Mr. A, due date of filing of return was 31st July 2025. He's a salaried employee and his salary was 10 lakh rupees. So he did not file return. He was a lazy man. He did not file his ROI up to due date. Why? Because he thought I will file my ROI later. The last date is 31st of December. बाद में file कर लेंगे, इतनी क्या जल्दी है? We will file before this last date. So this was the last date. So he was waiting, okay, I will file my ROI later. But suppose what happened, between this time duration from 31st of July till last date, income tax department was waiting for his ITR. Income tax department was waiting that he will file his ITR up to 31st of July. But because you did not file your ITR, so it might be possible that department will assess your income on department own information. So department did not wait for your filing of return up to last date. This date has been passed. Till this date, department will wait. Okay, somebody will file their ITR up to due date. But if you did not file your ITR, so it might be possible that department will own assess your income. That is called assessment. I told you there are three kinds of main assessment that is going to be discussed at final level: scrutiny assessment, best judgment assessment, or income escaping assessment. So because you did not turn up to file the income tax return and before last date, department done own assessment upon you and says that we will assume your income 15 lakh rupees or 20 lakh rupees or 10 lakh, depend upon the information they have. So now you have to pay tax on this. This is called assessment completion. So if department does the assessment, suppose before the last date, that means suppose department done the assessment on 15th November 2025. So you were thinking that I will file my return in December, but before that assessment has been completed. Then now you cannot file your belated return because you did not file yourself. And if the department done the assessment, then you have to file your return before 15 November. But because you did not file, so now you cannot file your belated return. So the date for filing of belated return would be 31st March 25. This is a fixed date. Sorry, 31st December 25 or before completion of assessment, whichever is earlier. So in this example, 31st December 25 or 14th November 25, whichever is earlier, 14th November 25. So your return belated could be filed only up to 14th November 2025. If you did not file it up to 14th November 25, then now you cannot file this because assessment has been completed. So that's a very interesting thing you have to remember for your examination purpose. That was 31st December or before the completion of assessment, whichever is earlier. Hence, the belated return cannot be filed after 31st December of the relevant assessment year. Same provision with the revised return. If you have filed your original return under section 139(1) or belated return under section 139(4), that can be revised up to 31st December 25 or before completion of assessment, whichever is earlier. So either you will file your return up to due date of ITR, and if did not file your return up to due date of ITR, then the belated or revised can be filed only up to 31st of December or before completion of assessment, whichever is earlier. Clear? How to know assessment date? That will be given in the question, Rashmi. In the examination and the question, the assessment date will be provided. Okay. The next is the recap of all the provision what we have discussed till now. So you can go through with the chart presentation from your study material, which has been beautifully drafted, consisting all the provision till now what I have been gone through with. Now illustration number 2 is asking, explain with brief reason whether the return of income can be revised under section 139(5) in the following cases. If that's a blatant, yes, you can revise return under belated return. Return already revised under section 139, yes, you can revise return as many times as you want up to the last date of ROI. If return has been filed as a return of loss under section 139(3), either it can be revised. The answer is yes, you can revise a return of loss also. There is no restriction on this. Now section 234A, interest for delay in filing the return of income. As we have discussed in the last chapter of TDS, there were two interest provision, that was section 234B and 234C. So 234A does not have any connection with the advanced tax provision. 234B and C both are connected with advanced tax provision. But 234A interest for late filing of. So I've told you, if you did not file return of income up to due date, there are some disadvantages. One is you cannot carry forward losses except house property and unabsorbed depreciation. The other disadvantage, you have to pay interest under section 234A. For the calculation of interest, I have told you we have to know 4 things. If you know 4 these things, you can calculate interest. The first was applicability. So section 234 is applicable when return is filed after due date. Return is filed after due date. Clear? This is the applicability of this section. Now, what is the rate of interest? The rate of interest is exactly same as per section 234B, 1% per month or part of the month. Now, the third is the amount on which this rate is going to be imposed. So, the total tax assessed tax less TDS, TCS, any relief and AMT credit. So what is the tax liability remaining after deducting these tax would be your amount on which you have to calculate the rate of interest, and the last would be the time. Any time calculation, we need 2 points, start and end. The start date would be automatically on or after the due date. The due date was 31st of July. That means the start date would be after due date. So if the due date is 31st of July, the time starting for the purpose of calculation would be 1st of August. If the date of ITR is 31st of October, the date would be 1st of November. If the date is 30th of November, the time start would be from 1st of December. So the start date would be only after the due date. And the end date would be the date on which ITR filed or 143(1) intimation order has been passed, as the case may be, or assessment has been done. Clear? So we need to calculate interest, and section 234A interest, all provisions are similar to section 234B almost. So interest under section 234 is attracted for failure to file a return of income on or before the due date. Under section 139(1). Interest is payable wherein assessee furnishes the return of income after the due date. So you can see the applicability is due to not filing of return up to due date. So it does not have any correlation with the advance tax provision. So this is a section on the basis of which numerical can be framed in this chapter. Everything else is, I guess, theoretical provisions, generally majority in this chapter. But if a pure numerical we can talk about from this chapter, that would be on the basis of section 234A is possible. Simple interest 1% per month or part of the month is payable for the period commencing from the date immediately following the due date and ending on the following. If return is filed, the date of furnishing of the return. If return is not filed, the date of completion of assessment. The date of furnishing of return and the date of completion of assessment, as the case may be, will be given in the question. The interest has to be calculated after deducting the assessed tax minus TCS, TDS, relief and AMT sale. No interest shall be charged on self-assessment tax paid, etc. Normal provision, you can go through with this. Now self-assessment tax. Rashmi, if no tax liability, then can file after due date without interest? Yes, if there is no tax, then there would not be any interest even in section 234A or B or C. So there is no tax liability, then there would not be any section 234A interest, correct? Pallavi Jha is saying, so in this section we can take 1% for a month or part of the month, but such part of month is only 1 day, then that 1 day we calculate 1%. Yes. Suppose the time duration is from 1st August and the time is 3 months and 1 day. You file your income tax return after 3 months and 1 day. That 1 day would be treated as 1%. So total 4% interest need to be charged. So it means during previous year 234C 3% is applicable till 31st March. Then if 90% not paid, then 234B is applicable 1% up to 31st July. Thereafter 234A is applicable. Is it right, sir? No, Kasak, what you are writing. You are saying your question is confusing. During previous year 234 series, 3% is applicable till 31st of March. No, that is wrong. 3% is applicable for 3 starting installment date on 15th of June, September and December. For the month of 15th of March, the rate of interest is only 1%, not 3%. This is wrong in your question. Then if 93, 3 and 1, no, it's 3, 3, 3 and 1. 3%, 3%, 3% and 1%. There are 4 installment date under advance tax. So first 3 installment date is 3, 3, 3 and 1%. Okay. And if 90% not paid, then 234B is applicable. 1% wrong. If 90% less than 90% deposit, then 1% per month or part of the month would be applicable. And the time duration will be start from 1st April 2025 till 143(1) determination of income or tax paid or assessment has been done. So there is no 1% fixed rate. It will depend from 1st April till the time of assessment or tax paid under section 234B. And 234A does not have any connection to advance tax. If return is filed on due date, then 234B and C could be there, but there would not be any 234A. Okay, so 234A does not have any linkage with 234B and 234C. Clear? Let me clear this for all of you. देखो भाई 234B is for advance tax, which say if less than 90%, then 1% per month or part of the month will impose. So 234 does not have any connection with filing of return or the installment date. This is going to be checked on 15th of March 2025 if the advance tax is less than 90% of assessed tax. Then 234B is applicable. It will start from 1st April 2025, fixed date from starting, and end on the tax paid, the 143(1) assessment, as we explained in the section, or the assessment done. That date is going to be given in the examination. Do not worry. In the question, it will be specified. You should know the starting date for all these three. The last date would be in the question. It would be given in the question. So that was first case, 234B. Now 234C, if the default is on 15th June 2024, the rate is 3% fixed. There is no starting day, there is no ending day. Whatever will be the short amount of tax deposit, 3% you need to charge. If it is on September 15, whatever will be the amount, 3% charge. If it is in December, 3% charge. If it is on 15th March installment short amount, only 1% need to be charged. So this is separate. It does not have any correlation with A or C. C is having separate provision. It does not correlate with B or A. Even B and C is for both advance tax deficiency. But even they do not have any interconnection. And 234A is having separate provision, late filing of return. And for late filing of return, start date would be always from the after due date, as the case may be. If it's suppose the due date is 31st of July, start date would be 1st August 2025 till the assessment or the tax paid, etc. That date also going to be given in the question. So for that time duration, 1% per month or part of the month need to be calculated. That's why I was asking in the TDS chapter, you have to make short note. So if you have prepared short note for section 234B separately, 234C separately, I can assure you there would not be any confusion. So those students are asking me this kind of question. I am sure about it. You did not make short note yet. So it's a request. Please prepare short note. That is going to be helpful for deduction as well as TDS chapter a lot. Okay. Now self-assessment under section 140A is a very simple topic. It says whatever tax need to be paid by you on the basis of information you have to self-assess your tax and you have to pay that tax. The tax which has not been paid as advance tax or TDS or TCS, so the balance tax which need to be paid at the time of filing of return, that is called self-assessment tax. So how it is different from advance tax, TDS, TCS? So generally advance tax, TCS and TDS, those are going to be paid in the same previous year. Look, TDS is also a kind of a tax which is paid in advance before end of the year. The tax has been deducted. In the same way, TCS also, it's a kind of a tax paid in advance, collected by the seller. Advance tax is a tax you have to deposit by yourself if your estimated tax liability exceeding 10,000 up to or more than 10,000. So even after paying all those taxes, if any tax has been remaining, that needs to be paid as self-assessment tax. Suppose your estimated tax is only 7,000. Only 7,000. There was no TDS applicable upon you. There was no TCS applicable. So of course, advance tax also not applicable because your tax liability less than 10,000. So that tax, how to be deposited? That tax going to be deposited at the time of filing of return of income. So the tax what we need to pay at the time of filing of return of income is called self-assessment tax. So payment of tax, interest, fees before furnishing of return of income, that is going to be called self-assessment, part of self-assessment. So where any tax is payable on the basis of any return required to be furnished under inter alia, section 139, after taking into account. So after deducting your already paid amount of tax, TCS, TDS, AMT credit, relief, etc., etc., the balance would be called your self-assessment tax. Order of adjustment amount paid by SSC out of the amount paid as self-assessment tax. First of all, tax, then interest, and then fees need to be deducted one by one. So first we will adjust the fees payable, then the interest, and the last amount would be the tax, which is going to be adjusted by the amount you have deposited. Interest under section 234A, how the amount would be calculated? Whatever is the assessed tax, the advance tax paid by you, the TCS, the AMT, the relief need to be deducted, and the balance amount need there to calculate interest section 234A. Amount required for section 234B that has been discussed under advance tax provision. A very interesting provision is updated return. So we have gone through with the return filed on due date provision. We have understand the provisions of belated return and revised return. So till now we can say that the last day of filing of return is 31st December 2025 for assessment year 25-26. So our previous year 24-25, the last date of filing of return is of course 31st December 2025. Till now we have discussed up to this kind of provision. But there is some updation, and the updated return is there, which says no, relax. If you did not file your return of income for assessment year 25-26 up to the last date of return, that was 31st December 2025, you do not need to bother. You can still file your return of income, and that would be called updated income tax return. Somebody asked, what if I have already filed my return of income up to 31st December? Can I also file an updated return of income? The answer is yes. So whether you have filed your income tax return up to 31st of December or you did not file your income tax return up to 31st of December, in both situations, you have the opportunity to file your return as updated income tax return. We called it ITR-U. So the department has made some provision that is still you can file your income tax return if certain conditions are fulfilled. There are certain restriction condition. If you fulfill all these restriction and condition, you are able to file an updated return. So what are the features of this return? It can be filed only once per assessment year. You cannot revise the updated return. Like you can revise a revised return, you can revise the original return, you can revise a belated return up to 31st of December. But if you once filed the updated return, which can only be filed after the last date, you cannot file updated return before 31st December. You need to file that after last date. So if you filed once updated return, you cannot revise that return again. It is one can be filed. It cannot be filed again for the same assessment year. Only amount of income to be offered to tax is to be specified under the prescribed income head. So under updated return, you have to show your that income which has not been included earlier in your return which has been filed. So if you have already filed your income tax return, then you have to show your additional income. If you have some additional income on which tax has not been paid, only in this case, you can file an updated return. Clear? If you did not file any return, then of course, whatever you are offering is an additional income for the tax purpose. So if you have already filed, then you have to show extra income in updated return. If you did not file any return, then whatever you are showing, of course, that is your extra income which has not been reported earlier. No return can be filed if department proceedings are going on. If your case is already under assessment proceeding, under section 143, 2, 143, 4, 147, etc., under section 144. So if your case under department proceeding, then again you cannot file updated return. If a taxpayer files an updated return and does not pay the additional tax, then the return would be invalid. In case of updated return, there should be some tax payment, extra some tax payment. Without tax payment, you cannot file an updated return. The additional tax liability would be 25% or 50%. In some case, the extra tax rate, whatever tax will be calculated, would be there. Extra 25% and 50% you have to pay of the tax amount under additional tax liability in case of updated return. So there are many features, restriction, condition under updated return. We will discuss them one by one. Option to furnish update return. Any person may furnish an updated return of his income or the income of any other person in respect of which he is assessable for the previous year, relevant to the assessment year at any time within 24 months from the end of the relevant assessment year. So for our assessment year, financial year 24-25, previous year 24-25, which is the last date for filing an updated return. Who will tell me what should be the last date for filing an updated return for previous year 24-25? In ITR, somebody is saying, asking, Pallavi is saying, in ITR you return after last date, interest will also be applicable. Yes, interest under section 234A, etc. also applicable. Lahari is saying, it cannot be less tax liability as the already filed one. Am I correct? Yes. Under update return, tax cannot be reduced, refund cannot be increased. Hardik is saying 27-28. No, Hardik, I am asking the date, not the range. I am asking what is the last date of filing updated return for previous year 24-25. Dilip is saying 31st December 25. No, Dilip, this is not the date for filing of updated return. This is the date for filing of normal return, belated return, or revised return. The updated date would be 24 months from the end of the relevant assessment year. Who will tell? Bhumika is saying 31st December 25. Wrong. Tambeshwari is saying 31st December 27. Wrong. Nanda Gopala is saying 31st October. Wrong. Sanjay is saying 31st March 27. Correct. So the correct answer is from Sanjay. Well done, Sanjay. It's 31st March 27. How it would be December? Pranav is saying 31st March 28. What are you saying? So what is our previous year assessment year? Our relevant assessment year we were discussing provisions. Second. From 24 months from the end of the relevant assessment year. So if the assessment year is 24-25, the last date would be 31st March 2027. If the assessment year is 25-26, the last date would be 31st March 2028. Clear? So for previous year 24-25, the assessment year would be 25-26. So the last date would be 31st March 2028. Pranav is right. Okay. Not December, it would be always March. No December date. Okay. 31st March 2028 for assessment year 25-26. Correct, Pranav. This is irrespective of whether or not he has furnished the return under section 139(1) or belated under section 139(4) or revised return under section 139(5). For example, an update return for assessment year 24-25 can be filed up to 31st March 27. And for assessment year 25-26, it could be filed up to 31st March 2028. Clear? Non-applicability, update cannot be filed in following circumstances. Of course, the update need extra tax. So in any situation, The tax can be reduced or refund can be increased. There cannot be update return applicability. The provision of update return would not apply if it is a return of loss, because if you are able to file your return of loss, so that will reduce the income tax liability of your future years. So return of loss is not allowed under updated return if he has the effect of decreasing the total tax liability. If the tax is going to be reduced, if you are going to reduce your income, then update return is not allowed. Or if the refund is going to be increased, so refund is going to be increased when income is going to be reduced. So in any case, if the refund is increasing, no update return. If the tax is decreasing, no update return. If the loss is increasing, no updated return. Update return can be filed if original return is a loss return and update return is a return of income. Yes, you can, if you have filed original return up to due date is a return of loss, but under update return, if you want to show your income, then that is allowed, but vice versa is not allowed. If you've already showed income under normal return and under update return, you want to show loss, that is not required because this will decrease your income tax liability. Update and to be furnished for subsequent year. In case number 3 above, you can go through with these provision. Circumstances in which update return cannot be furnished. If the case is pending under income tax proceeding, the update return cannot be filed. Update return for the relevant assessment year cannot be furnished by such person or belong to such class of person as may be notified. Taxed on update return. So in case of update return, tax need to be calculated again because you have shown extra income. So tax, interest, etc. going to be calculated again and you have to pay that tax, etc. So in case where no return is furnished earlier, tax need to be paid along with interest and fees before furnishing of the updating return. Additional tax computation will be shown separately. In some cases, you have to pay additional pay of tax 25%, and in some cases, you have to pay additional tax 50%. So this is the way you have to calculate your tax liability. It's a normal calculation of tax liability as we normally do when you file your income tax return. So for the purpose of tax calculation under update return, your advance tax, your TCS, your relief, etc., your AMT credit, whatever it has been paid, going to be reduced. So there is nothing new. The normal tax calculation will be done. The extra tax, additional tax need to be paid. That how need to be paid and what amount of additional tax need to be paid, that we will see later in this chapter. Interest under section 234A need to be calculated, of course. In a case where return is furnished earlier, if you've already filed your return earlier, in that case, in case of updated return, new tax liability need to be calculated, and if any interest under section 234A, B or C already has been paid, then when you calculate the new interest under section 234A, B, C, the interest which has been already paid need to be reduced and the balance 234A, B and C interest need to be paid. Theoretical provision, you have to go through with it. Interest 24B, etc. need to be calculated again because the liability of tax need to be increased. So there could be increment in the 234B interest also. There could be increment under 234C also. There could be increment in 234A also because the tax has been increased. So automatically the interest under section 234A, B or C would be increased. The additional income tax payable at the time of updated return. So it says if such return is furnished after expiry of the time available under section 134, 139.4 or 139.5 of the assessment year and before completion of the period of 12 months from the end of the relevant assessment year, the additional tax need to be paid is 25% of the aggregate of tax and interest payable as determined. If such return is furnished after the expiry of 12 months from the end of the relevant assessment year, but before completion of the period of 12 months from the end of the relevant assessment year, the rate would be 50% of aggregate tax you need to pay. So whatever there would be a tax calculation, that tax 25% extra need to be paid, and that tax extra 50% need to be paid in the second case if the return has been filed after expiry of 12 months from the end of the relevant assessment year, but before completion of 24 months from the end of the relevant assessment year. So technically we can say for previous year 24-25 assessment year 25-26, the last date is filing is 31st March 2028. So from 1st April 2027, if the update return has been filed between this duration, the additional tax would be 50%. And before that, if update return has been filed, the additional tax would be 25%. That means from 1st January 2026 till 31st March 2027. Now we have the next topic is defective return. And after defective return, we are having the transparency provisions of submission of PAN number, Aadhaar and PAN linkage. That is completely theoretical provision, and the TRP provisions also. So I guess we need to take a break. Let me see if there is any query. After that, we will take a short break. If an SSC wants to file his return of loss 139.3 but failed to file up to due date, he has any option of filing his return again. Laurie, he can file his return of loss up to the last date of that previous year. That means up to 31st December 2025, but he cannot carry forward his losses. That is a problem. He cannot carry forward his losses. Only house property and unabsorbed depreciation can be carried forward in this situation. Okay. So, Mr. Bhargav, can we take a short break? Can we resume, Mr. Bhargav? Okay, welcome back, everyone. I believe you must have your coffee, tea, etc. So there are some queries. Okay. Update return can refund claim? No. In case of update return, you cannot claim any refund. Rashmi, if no tax liability, you cannot file your update return. Okay, there must be some tax for filing update return. Nayan is asking, can I file update return for assessment year 22-23 in financial year 24-25? Yes, up to 31st March 2025, you can file your update return. So what is 143(1) intimation? Not getting it. Can you please tell, answer? It will be always given in questions. Yet it would be given in questions. Intimation is when you file your declaration of liability. Then again the response comes from income tax department against your income tax declaration. That is the intimation. Intimation means information. So suppose I have declared my income tax liability rupees 7 lakh rupees. Then when I file my income tax return, the department will send me an intimation, information under section 143(1) that whatever information you have submitted to us, on the basis of that information, your tax calculation is correct or incorrect. So that intimation is called section 143(1) intimation. So technically what we have submitted, department will check the arithmetical calculation and the tax you have paid, that is showing on income tax portal or not. On the basis of prima facie evidence, they will send you an acknowledgement, that is called intimation under section 143(1). Given the specific information, if you have submitted the correct information and if it is matched with the income tax details, then it would be no refund, no tax. If you have claimed refund, then there would be refund granted. If there is any tax liability, they will show under the intimation process. So intimation is a kind of information what we have received in response of filing of our income tax return. Next is Mahi is crying. She is asking, sir, where is the story? Okay, चलो आज स्टोरी सुन लो पहले. Okay, स्टोरी बड़ी इंटरेस्टिंग सी है. एक जगह थी जहां से बहुत सारे फ्रॉग समझते हैं, फ्रॉग वाज गोइंग, और वो फ्रॉग एक नया अपने लिए रहने के लिए प्लेस ढूंढ रहे थे, एक पाउंड ढूंढ रहे थे जहां पर वो लोग रह सकते हो. तो पूरा एक जो फ्रॉग्स थी उनकी एक पूरी कॉलोनी जा रही थी सर्चिंग में. और हुआ क्या कि रास्ते में एक बड़ा सा डिग आया, एक बहुत बड़ा गड्ढा था जहां पर 2 फ्रॉग गिर गए नीचे, और वो काफी डीप था. तो बाकी सारे फ्रॉग उनको बोल रहे थे जंप करने के लिए कि बाहर निकलो सो वी कैन कंटिन्यू आवर जर्नी. तो सब उनको बोल रहे थे जंप करने के लिए बाहर. बट थोड़ी देर बाद रियलाइज हुआ जो फ्रॉग ऊपर थे सारे उनको कि दे कैन नॉट कम आउट बिकॉज ये बहुत डीप है और वो उतना जंप नहीं कर पाएंगे. तो काफी सारे फ्रॉग ऊपर बात करने लगे कि पॉसिबल नहीं होगा, ये बहुत डीप है, ये लोग जंप करके बाहर नहीं आ पाएंगे. लेकिन जो दोनों फ्रॉग नीचे गिरे हुए थे, दे वर ट्राइंग वेरी हार्ड, कैसे भी करके जंप करके ऊपर आ पाए, बहुत कोशिश करी. तो काफी कोशिशों के बाद भी जो एक फ्रॉग था वो बहुत ट्राई करने के बाद नीचे गिर गया एंड ही डाइड बिकॉज वो उसे क्रॉस नहीं कर पाया. जो दूसरा फ्रॉग था वो कंटिन्यू कोशिश करता रहा, ट्राई करता रहा बार बार बाहर आने के लिए, और अल्टीमेटली ही सर्वाइव, ही केम आउट ऑफ दैट होल. जब वो बाहर आया तो बाकी सारे फ्रॉग्स जो थे उन्होंने पूछा, यार तुम कैसे बाहर आए, ये तो पॉसिबल ही नहीं है कि तुम बाहर निकल सकते हो यहाँ से. तो जो फ्रॉग बाहर आया था उसके दोस्त ने आकर उन सबको बताया कि एक्चुअली ये जो फ्रॉग बाहर आया है ये डेफ है, इसे सुनाई नहीं देता. तो जब आप लोग सब ऊपर से बातें कर रहे थे कि बाहर नहीं निकल पाएंगे यहाँ से और ये तो दोनों को अब छोड़ के चले जाते हैं, तो ही वॉज थिंकिंग कि आप लोग उसके लिए चीयर कर रहे हो. तब से लोग बहुत चिल्ला रहे थे कि छोड़ दो इनको, हम जा रहे हैं. तो वो जो फ्रॉग डेफ था उसे कुछ सुना ही नहीं दे रहा. तो ही वॉज थिंकिंग कि सब उसको अप्रिशिएट कर रहे हैं, जितना वो जंप कर रहा है उसको अप्रिशिएट कर रहे हैं बाहर आने के लिए. तो जो डेफ नहीं था उसको कहीं ना कहीं सुनाई दे रहा था, वो डिमोरलाइज हो रहा था क्योंकि बाकी लोग कह रहे थे कि अब पॉसिबल नहीं है, ये इम्पॉसिबल है. तो वो उसको सुनने के बाद, कोशिश के बाद भी बाहर नहीं आ पाया क्योंकि उसको लगा ये इम्पॉसिबल है, नहीं हो पाएगा, एंड ही लेफ्ट हिज एफर्ट. बट दिस वन बिकॉज ही इज डेफ, so he was एबल टू कम अप बिकॉज उसको समझ ही नहीं आया कि बाकी लोग उसको इस काम को करने से मना करें. सो मोरल ऑफ द स्टोरी क्या है कि आपको अगर लोग कहते हैं कि आपसे सीए नहीं होगा, पढ़ाई नहीं होगी, आपके कैपेबिलिटी के बाहर, तो जस्ट डोंट लिसन टू दोस पर्सन. सो अगर आप अपने पे बिलीव करते हो, यू कैन डू मिरेकल्स, यू कैन डू इम्पॉसिबल. सो प्लीज अपने ऊपर बिलीव रखो. लोग तो कहते ही रहेंगे, तो इसीलिए उनको छोड़िए, अपने पे बिलीव करिए, अपनी मेहनत में कोई कमी मत आने. एंड इफ इट इज पॉसिबल, अगर आप ये कर सकते हो, देन I assure you that nothing is impossible. You can definitely become a chartered accountant. चाहे सब लोग कहते रहे कि आपसे नहीं होगा. Okay? So that was a story. चलो भाई आगे क्या है. Kiran Mishra is saying, sir, it is compulsory to pay additional tax at the time of filing updated return. Yes, you have to file your tax. Without that, you cannot file a updated return. Nandha Gopal R is asking, sir, in case of loss in house property, it cannot be set off and carry forward to next year. Then why in section 139(3) it is said that carry forward is allowed? Abhi we have discussed that only the house property losses and unabsorbed depreciation that can be carried forward even if you filed your return of loss after due date. Any other loss except unabsorbed depreciation and income from house property cannot be carried forward. Okay, cannot be carried forward. I hope it's clear. Chalo. Next is back to the provisions. Now the provision is regarding defective return under section 139(9). How to respond defective return. So when you filed an income tax return and suppose there is some defect, some information is misrepresent or there is some information is missing, then department can send you a notice that there is some specific defects in this return, so kindly rectify these defects. And a specific time period, generally of 15 days, will be given to you. Within those 15 days, you have to rectify these defects, and if you are able to rectify these defects and going to submit it again, then it would be considered as filed on the date on which it is originally filed. That return would be considered as originally filed. Suppose you have filed your return on 25th of July. Clear? 25th July, that is before due date. After 1 month, department issue a notice under section 139(9) that there are certain defect in your return, that this information is missing, the tax information is not mismatch, not matching, etc. And they have provided you 15 days time. So the 15 days notice has been come to you and you rectify those defects within 15 days in response to that notice. So if the defect has been correctly rectified, then it will be assumed that the return has been filed on 25 July itself. Even if you have rectified the defect in August or September or October, it does not matter. Return will be assumed as originally filed on 25th of July. Very simple provisions. So under this section, the assessing officer has the power to call upon the assessee to rectify the defective return. Where the assessing officer considered that the return of income furnished by the assessee is defective, he may intimate the defect to the assessee and give an opportunity to rectify the defect within 15 days from the date of intimation. The assessing officer has the discretion to extend the time period. This time period could be extended. If the defect is not rectified, if you did not rectify the defect, that return would be considered as invalid return. That is void ab initio. That means there is no return has been filed. If you have rectified the defect, then the return would be treated as filed on the date on which it has been originally submitted. Next was fees for default in furnishing return of income under section 234F. So I have told you that if you have filed your return on due date, there would not be any interest under section 234A and there would not be any penalty or fees for not filing of return. So that was the fee under section 234F, and it says if you have filed a return up to due date, there would not be any fees. But if you filed a return after due date, then in that case, there would be a fees of rupees 1000 going to be charged. If your total income does not exceed 5 lakh, the fees would be 1000. And if your total income exceeding 5 lakh rupees, then the fees would be 5,000 rupees you need to pay if return has been filed after due date. Clear? Now, these are income tax transparency reforms, and these are the basic provisions, theoretical provision regarding where to submit your PAN number, where to submit your Aadhaar number. You have to link your Aadhaar with your PAN number, etc. You must have read these kind of news in the newspaper occasionally when there has been information that you have to link your Aadhaar with your PAN up to a certain date. If you did not link it, then for the purpose of linkage, now you have to pay 1,000 rupees fees for the linking of Aadhaar and with your PAN number. So let's read these provisions. These are generally for yourself reading. I'm going to discuss main heading of these provisions. There's nothing technical in this. So permanent account number under section 139A, the section says person required to apply for PAN. Those person need a PAN number mandatorily. It says every person, if his total income or the total income of any other person in respect of which he is assessable under the act during any previous year exceed the maximum amount which is not chargeable to income tax. So if your total income exceeding the basic exemption limit, you have a PAN number because you have to file the income tax return as per compulsory filing. So for filing of income tax return, PAN number is mandatory, but not vice versa. If you are having a PAN number, then you have to file income tax return. That is not a case. But if you need to file income tax return, you should have a PAN number. What is the time limit for applying for PAN? The time limit has been given in this. Every person carrying on any business, if the gross turnover, sale, etc. exceeding 5 lakh rupees, you have to apply for a PAN number. Every person being resident other than individual which enter into a transaction, financial transaction aggregate more than 2,50,000, you have to apply for PAN number before this specified date. Every person is a managing director, etc., have to apply for PAN number. So these are theoretical provision. You have to read them. This is important. Person required to apply for PAN. Again, some extra condition has been inserted. You have to go through with this. For the purpose of examination, the very important point is over here. There are certain transactions. This is very important. In past year examination also, out of these transactions, some transaction has been asked. In those cases, you have to submit your PAN number. So those are the cases, those are the transactions in which you should have a PAN number to submit. If you are having any sale or purchase of a motor vehicle, you have to submit your PAN number. Opening an account, time deposit referred to and so, you have to deposit your PAN number. Making an application to any banking company or cooperative bank, etc., you have to submit PAN number. If you are paying to a hotel or restaurant, you have to submit your PAN number if the payment is exceeding 50,000 rupees in cash. Payment for connection or travel to any foreign country, if there is a payment of more than 50,000 in cash, you have to submit your PAN number. Payment for a mutual fund, if exceeding 50,000, you have to submit PAN number. Out of those transactions, 90% cases, the amount limit is 50,000. Multiple in almost 90% cases, the amount is 50,000. You can see this. So you have to go through with these transactions, and you have to remember that for the purpose of examination, if these transaction has been there in the question, then you have to write whether PAN number is required or not required. So you have to remember these transactions as well as the amount limit also. So as I have told you that in case of almost 90% cases, the amount limit is 50,000. Okay. So you should read those transactions. Almost 18 point is there. Minor to quote PAN number of parent or guardian. Declaration by a person not having PAN. If you do not have any PAN number, then you have to declare, and you should file a form number 60, giving the information of yourself if you do not have any PAN number. Non-applicability, in certain cases, there is no requirement of submission of PAN number if these related to the central government, state government, etc. Next is intimation of PAN to person directing or collecting tax or source. In the case of TDS, TCS, we have already seen that the payer need to submit his PAN, etc. in case of TDS and TCS. If you are not going to submit your PAN, etc., the TDS or TCS would be directed at higher rate. In case some cases may be higher to 20% also. You have to quote your PAN number for certain documents. For every income tax document, you have to submit your PAN number now. Requirement to intimate PAN and quote PAN not to apply in certain persons. For certain person, there is not requirement to submission of PAN number. Interchangeably of PAN and Aadhaar number. Now PAN and Aadhaar is going to be linked. You can go through with these provision, quoting of authentication of PAN or Aadhaar number. There are certain transactions in which you have to quote your Aadhaar or PAN number. Transaction has been mentioned over here. How to make CBDT rules. CBDT can make rules for submission of Aadhaar and PAN number. You have to link your Aadhaar with a PAN number, and otherwise you have to pay penalty of 1,000 rupees for the purpose of linking. The last date has been gone, of course. So you have to pay that 1,000 rupees for linking of Aadhaar and PAN. There are certain penalty if you are failure to comply with all these provisions as mentioned in this section. Linking Aadhaar with PAN, kindly go through with this provision. These are all theoretical provision. If there is any confusion, you can ask me in the next class. I will solve your problem. But there are nothing very technical. The rules, the dates has been given over here. From 1st July 2023 and continue till the PAN becomes operative, a fee of 1,000 has to be paid. If the Aadhaar and PAN is not linked, that PAN number would be inoperative. And for on or after 1st July 23, if you need to relink that Aadhaar or PAN, or if you need to link that Aadhaar and PAN, you have to pay 1,000 rupees for the purpose of that linking. A scheme has been framed by tax return prepare scheme by income tax department that either return could be filed by SSC himself. He can file this return by the help of his financial consultant or tax consultant, or even he could able to file return of income through tax return prepare scheme. The income tax department has been launched the tax return prepare scheme that after completion of a certain course, the income tax department will allow certified tax return prepare who can file return of income of an assessee. There are some educational qualification, some restrictions are there who cannot done this course, etc. under this scheme has been specified. This section provides that for the purpose of enabling any specified class or classes of person to prepare and furnish their return of income, the CBDT may notify a scheme to provide that such person may furnish their returns of income through a tax return prepare authorized to act as per the act. So these are kind of agent, we can say, just like LIC agent, etc. So these are income tax agents on behalf of income tax. They are going to file your income tax return. They are called tax return prepare. The tax return prepare shall assist the person furnishing the return in a manner that will be specified in the scheme and shall also affix his signature on such return. A tax return preparer means any individual other than an officer of a scheduled bank. He cannot be a tax return preparer. Any legal practitioner who is entitled to practice in any civil court in India, or an accountant cannot be the tax return preparer, or an employee of the specified class or class of person. What is the meaning of specified class or class of person? For this purpose means any person other than a company or a person whose accounts are required to be audited, or under any other existing law who is required to furnish a return under the Act. The scheme notified in the said section may provide for the following. What are the educational qualification, the manner and the period for which the tax return preparer shall be authorized, the code of conduct, the duties, etc. All the provision has been summarized over here. Application, eligible person, any person being an individual or a HUF. Tax return preparer, only those person can work who has been issued a tax return preparer certificate and a unique identification number to those. Everyone could be a tax return preparer except these person which has been discussed earlier. Education qualification, you need to be a recognized Indian bachelor degree from a recognized university or institute, or you are CA intermediate student, CS intermediate, or cost accountant intermediate student could also do this course. Preparation of and furnishing the return by the income tax department, you can go through with these provisions. Illustration, Mrs. Hetal, an individual. A tax return preparer cannot file a return of a person who is required to do tax audit, whose books of accounts required audit under Income Tax Act or under any other act. So this illustration belongs to that provision. You can go through with this. Person authorized to verify return of income. Who will sign the return? So if in case of individual, the individual is authorized to sign the return. Where he is absent from India, the person authorized by that individual is able to sign the return of income tax copy. When he is mentally incapacitated from attending to his affair, his guardian or any other person competent would be able to sign. Where for any other reason it is not possible for the individual to verify the return, any person authorized by him or holding a valid power of attorney on behalf of that individual able to sign the return. In case of HUF, Karta will sign the return. When the Karta is absent from India, any other adult member of the HUF can sign the return. Where the Karta is mentally incapacitated from attending to his affairs, any other adult member of the HUF able to sign the return. In case of company, the managing director, etc., any director, so these information has been given who can sign the return on behalf of any person. So these were the provision. As I always say, revise twice. That's my advice to make you wise. Now we will discuss the provisions of test your knowledge questions. And after that, the MCQs we are going to discuss one by one. First of all, test your knowledge questions. Generally, test your knowledge question belongs to theoretical provision in this case. These are test your knowledge question. Let me see if there's any query before. Purv is asking, linking PAN and Aadhaar is not free of charge now. Yes, it is not free of charge now. It was free till July 2023. After that, the 1000 rupees fees need to be paid for linking of your Aadhaar and PAN. Presumptive tax system means that is you need to refer PGBP section. PGBP actually head of income, in which it has been explain in detail what is the meaning of presumptive tax system. Presumptive tax system is section 44 AD, on which we need to pay tax with certain percentage, not on the basis of your real net profit, on the basis of certain percentage which has been prescribed under the Income Tax Act. चलो भाई डिस्कस करते हैं टेस्ट योर नॉलेज क्वेश्चन. State with reason whether you agree or disagree with the following statement. Return of income of limited liability partnership could be verified by any partner. So for that purpose, you have to refer those provision what we just skipped. That is the person who are able to sign the return. But in case of LLP, that is called designated partner, can file return of, can sign return of income. Time limit for filing return under section 139(1) in case of Mr. A having total turnover of 160 lakh. 100 lakh received in cash for year ended 31st March 2025. Whether or not declaring presumptive income under section 44 AD is 31st October 2025. So the question is asking, if suppose Mr. A is having turnover of 160 lakh, then the time limit, the due date for filing of his return would be 31st October 2025 or not. So of course, if Mr. A falls under presumptive taxation scheme, that means he is ready to pay income tax on the basis of the specific percentage which has been mentioned in section 44 AD on cash 8%, and on the remaining revenue, 6%. So if he is ready to pay income tax, if he is ready to declare his income more than or equal to this percentage, then the due date of ITR would be 31st July 2025. But if he wants to declare his profit less than this specific percentage, then audit need to be conducted. So in that situation, the date would be 31st October 2025. Mr. Vineet exercised the option of shifting out of the default tax regime provided Section 15 BAC and submit his return of income under the optional tax regime. For 25-26, consisting income under the head salary, income from house property and bank interest. He realized that he had not claimed deduction under Section 80 TTA in respect of his interest income on the saving bank account. He wants to revise his return of income. Can he do so? So suppose this is a question to you that he filed his return on 12th September 2025. So first of all, you have to tell me whether this return file is a due date return file or it's a belated return. First of all, answer me this. Let's see what is your answer. After due date, Hardik is saying, belated return saying, no, it's a file after due date. Correct, Larry. Anagda is not filed on due date because he is a salaried person. So due date would be 31st of July. And he has filed in September. So it is a belated return. So first, the return is called belated return. Now the question is, can he revise this return on 21st of December 2025? Is it possible or not? Now you have to answer this, whether we are able to revise this return or not on 21st December 2025. Yes, a belated return can also revise up to 31st December 2025 or before completion of assessment, whichever is earlier. So there is no information regarding the completion of assessment. So last date would be 31st December 2025. So definitely he can revise this return. Now the question also asks, suppose, can it examine, would your answer be different if he discovered this omission on 21st March 2026? Can he revise his return if he found this mistake on 23rd March 2026? Of course not, because the last date for revision has been gone. That was 31st December. So he can file now update return. That is a possibility. He can go for an update return. That is a possibility, but he cannot revise the return. Okay. Next is, examine with reason whether the following statement are true or false with regard to the provision of Income Tax Act 1961. The assessing officer has the power inter alia to allot pen to any person by whom no tax is payable. Mr. Vayakuntu Savu Mayana is saying penalties applicable for belated return. No penalty, of course, 1,000 or 5,000 could be paid. If your TI is up to 5,000, the penalty, we will say fees, not penalty. Under section 234F fees, 1,000 would be there if your total income up to 5 lakh. If it is exceeding 5 lakh, then in that case, 5,000 rupees need to be paid. Clear? But if it is a return filed on due date, then you can revise it easily. There would not be any penalty. Okay, the assessing officer has the power to inter alia to allot pen to any person by whom no tax is payable. Yes, assessing officer is having that power. So what is the meaning of this word, inter alia? Who will tell me the meaning of this word? Like vice versa means opposite. Fine. So these kind of, I guess these are Latin word which has been included in some law languages. So like vice versa, inter alia, vis-a-vis. So what is the meaning of word inter alia? With others, yes. Among others, you can say, Kiran, you are absolutely right. Among other things, well done. Preeti Nanda, very well done. Okay. So of course the assessing officer can do this. He can allot you a PAN number even if no tax is payable by you. You can read this provision in the PAN number allotment cases. What we just ask you to please go through with the provisions. Now point number 2 is where the Karta of HUF is absent from India, that we just discussed. The return of income can be verified by any male member of the family. True or false? Any adult member, not any member is the wrong answer. If you are saying any member, that is the wrong answer. Teacher will not give you marks. Any adult member, because member could be a minor also, but he cannot sign it. So any adult member is the correct answer in this case. Clear? Question number 4 and 5 is theoretical, so you can go through with the theoretical provisions of those questions. So now we are moving for our MCQ part. I hope you all are ready for this. Yes, among other things, the correct answer, Mr. Vetupuntu Vasu Maina. Hardik is asking, sir, 6% and 8% is the income in the 44AD, then tax would be calculated according to slab rate. Am I correct? Yes. The 6% and 8% just to determine your total income from that business. So tax would be, of course, going to be calculated as per slab rate because that is a normal business income. Absolutely correct. So now we are moving for our MCQ. I hope you all are ready for those MCQs for chapter number 1. Let me share you with the sheet. This is now our moment of truth. So here is question number 1. Read it carefully and then only answer. As per section 139(1), a company shall have to file return of income when total income exceeding 2,50,000, when total income exceeding maximum amount not chargeable to tax, when total income exceeding 3 lakh rupees, whatever may be its income. Very simple question, of course. Kasak is saying B. What are you saying, Kiran? A. Why? It's a company shall have to file the return. The question is regarding the company. Pallavi is saying C. Somebody is saying A. Somebody is saying B. सारे ऑप्शन बता दिए तुम लोगों ने, किसी ने A, B, C, D. What is happening? So as per section 139, a company shall have to file its return of income. What is the correct option in this case? Pooja is saying C. Why? So in case of company, they always need to file their return of income. Where there is an income or loss, it does not matter. So out of these 4, the correct answer would be option number D. Company always required to file income tax return irrespective of its income. Okay. Sure. Next पे चलते हैं. Question number 2. As person, section 139(1), an individual other than an individual of age of 60 years or more opt to be taxed under the old, that means optional tax regime we are talking about, have to file ITR if income exceeding 250, taxable income or total income exceeding 3 lakh rupees. We are talking about a senior citizen. Total income before allowing exemption under section 54B, D, E, C, F, G, GA, GB, and deduction of section 80C to 80U exceeding 2,50,000. TI before allowing deduction under section 80C to 80U exceed 250. So this is not a case of senior citizen. The question says in individual other than an individual, okay? So that is not a senior citizen, When they are need to file their return of income, as per option number C is the correct answer. This total income exceeding 250 was the point number 2, but the point number 4 which has been inserted, that is the more accurate point. Suppose total income exceeding 250, but if GTI does not exceeding 250, then so C point is technically expand the point number 2 scenario. So even your total income does not exceed 250, but if your GTI exceeding 2,50,000 before including the deductions or before giving the effect of exemption, then you have to file your income tax return. So technically point number C or point number 4, what we have discussed in the notes, having the wider scope in comparison to point number 2. So point number 4 automatically cover point number 2. So whenever there is an MCQ, you have to select that option which is more accurate. So option A could be accurate, but that could be wrong if suppose its total income does not exceed 250. Suppose like this, the GTI is 4 lakh and deductions under section 80C to 80U. Suppose in the question is 3 lakh. So now TI would be 1 lakh. So now you will say no, he does not need to file income tax return. So as per point number 2, you will say he need not to file your income tax return. But if you will say point number 4, which has been discussed earlier today's session, if you will say now as per point number 4, then point number 4 will add 3 lakh rupees reduction in this. And now the income would be 4 lakh. And this need to be calculated for basic exemption limit, which is exceeding 2,50,000 in this above case. So he has to file his income tax return. So technically point number 2 is not that expanded vision which point number 4 have. So point number 4 will be wider than point number 2. So according to that, C point is of course the correct answer in this case. Nandha Gopal R is asking, sir, in this, how can we find he is a non-resident? If the question is silent, you will always treat some person as a resident. If that would be a non-resident, that is going to be specified in the question. Okay. This is very interesting. Let's see how many of you are able to give the answer of this question. Raja dies on 25th December 2024. And his total income till 21st December 24 was 3,50,000. Thereafter, his business was inherited by his daughter Rani. Her total income from such business was 1,75,000. Daughter does not have any other income. In this scenario, she. Which option is correct? A, B, C, or D? Read carefully and then answer. Anshika is saying A. इतनी जल्दी आंसर क्यों देते हो तुम लोग? जब तक मैं सेक्शन क्वेश्चन पढ़ता हूँ आप लोग आंसर दे देते हो. At least I have asked you 100 times. 100 तो नहीं, at least 10 times. Read the question, apply the provision, and then give answer. You just read the provision and just give the answer. Malu is saying C, Tambeshwari is saying C, Bhaskar is saying C. Generally, it is a tendency that in MCQ, the answer is having the shortest answer. The option is having the longest answer would be correct. But it is not always. Okay. Logic lagao. Kiran is saying C, Aisha is saying B. Sabah Shakil is saying B. Apurv is saying D. Very good. Mr. Vayakunta Vasu Maina, if you are sending your answer on query portal, so kindly write down the question number also for which you are sending your answer. If you write it down like option D or C, how I would be able to understand which question option answer you are giving. So kindly write it down the question number also. Okay, Dilip is saying A, Neha is saying B, Neeru is saying D. Okay, very bad, very bad. Lahori is saying he had already filed his return by the due date before his death. Okay, wow. ये क्या बात हुई? He had already filed his return by the due date before his death. How it's possible? For financial year 24-25, the due date would be 31st of July. How he will be able to file his return before his death? He's almighty, he already knows I am going to die. How it is possible? You cannot file a return of income before March until those specified cases in which the previous year return need to be filed in the same year. This is not that case, Lauri. So Rashmi is saying C, Pooja is saying C, Pallavi is saying B. The correct answer is B. It's not C. Why? Because there was a starting provision which says when your total income or the income of that person for which you are assessable under this act is exceeding the basic exemption limit. So her father dies and her father income was 350, which is exceeding 2,50,000. So her father required to file return of income, and because he died, so she needs to file return of income of that person for which she is assessable under this act. So she will file the return of her father 3,50,000 because that income exceeding the basic exemption limit. But after that, her income was only 1,75,000, which does not exceed 250 basic exemption limit. So why she will file his income tax, her income tax return? So she only need to file the return of income tax of her father, not herself income. Suppose in this question, if I'll make it 2,75,000, then we can say yes, she need to file both return, one as a legal heir of her father and one for herself. But in this scenario, the correct answer would be only point number B. In book where this provision is given, आज ही तो पढ़ा है सुबह section 139, 139(1), point number 2, compulsory return filing, and point number 4. In both cases, we discuss this kind of provision. क्या हो गया भाई? चलो. The due date of filing the return of income under section 139(1) for 25-26 in the case of a company. What it should be, again read all options first, then only give the answer. In case of company, the answer is just like 31st October. But you have to read all the option because we have to select the option which is wider scope always. So in all these four category, Kasak is saying C, Mahi is saying C. Mahi, you were correct earlier. It is D. Because it is a company then 31st of October. And suppose if it is a company who needs to furnish report under section 92E. So that would be a more correct answer. This is the more correct answer in comparison to this. Only for a company is this provision. And what if that company need to furnish report under section 92E? Then how could be this could be correct? So the correct answer would be this 30th November because this answer already included in this. So this is in a wider scope. So the correct answer is option number D. Almost point number 5, 6, 7 is having the same answer. Option number D. For 5, option number D. For again 6, almost same kind of question I framed. The filing date of return of loss in case of a person other than a company or firm is. The filing date of return of loss in case of a person other than a company or firm is compulsory, non-compulsory, compulsory if assessee has to carry forward laws which are allowed to be carried forward and set off, compulsory if assessee has to carry forward loss more than 1 lakh rupees, which is the correct answer in these options. The correct answer is of course option number C. Well done. Next. If assessee wants to carry forward the loss, the return of loss must be submitted. What is the correct answer? If you want to carry forward the return of loss must be submitted. The correct answer is option number A, up to the due date. Suppose there is one more option, on or before due date under section 139(1), but in case of house property losses, or unabsorbed depreciation up to last date of ROI. Then which option should be correct? E. Why? Because it is having the wider space to cover even point number A. So that's why I was asking that even if there could be two correct answer in MCQ's option, but the answer which is covering the other option would be the correct answer in MCQ. So you cannot fight that that was also the correct answer. I have written down that the company due date of ROI is 31st October. How it could be wrong? It could be wrong because option D is covering option C also. In the previous example, if you can see, option D is covering option C also. So you have to read all the option always under MCQ. It should not be the practice of giving the answer that when you are going for option A, you find out that yes, option A is meeting the answer of question. So let me take that. At least you have to read all the option at least once. So you could see that yes, maybe there could be an option which is covering A also, and it would be wider than option A. So that would be the correct answer. So please, it's very important when you are solving MCQ to read the question very carefully and as well as read the options also very carefully. Okay. My saying, sir, you are right. I know I am right. Thank you. Okay. So, belated return can be filed at any time. What is the correct answer of question number 9? Yes, Mr. Vayakunta Sabu Maya. What is the correct answer of question number 9, Mr. Mayana? Send me your answer. Pallavi is saying C, Pooja is saying D, Neha is saying C, Dilip is saying C, Kiran is saying C, Hardik is saying A, Mai is saying D, Mr. Mayana. The correct answer is option number C. No, this kind of definition has not been there. The definition is this: before 3 months prior to the end of the relevant assessment year or before the completion of assessment. So Hardik, what you have done again, you have just done this considering the 9 months time from the end of the relevant assessment year. So before expiry of 9 months from the end of the relevant assessment year is completely wrong. If you are giving option number A correct, the correct answer is option number C. Yes, Mr. Vaibhav, correct. Next is, what is the last date of filing of ITR for 25-26 if no assessment has been done? Very simple question. भाई अपडेट रिटर्न थोड़ा ना पूछ रहा हूँ नितिन. Why are you giving answer for updated return? वो भी 31st March 28 होता है. Why are you saying C? The correct answer would be B. It's very simple. B. Okay. Chalo. What is the last date of filing of ITR for? This is very interesting question. What is the last date of filing of ITR for assessment year 25-26? If assessment has been done on 10th December 2025 and it was communicated to the assessee on 25th 12 2025. So what is the last date? चलो हिंट दे देता हूं. लास्ट डेट होती है दो. एक तो हो गई 31st December 2025 and second is before completion of assessment. चलो provision is before completion of assessment. Fine. चलो अब चीटिंग करके आंसर करो. सही डेट यहां पर कौन सी आनी चाहिए? and whichever is earlier. प्रोविजन क्या पता है? 31st December 2025 and it is before completion of assessment. Completion, not communicated. Not communicated. Before 15 days, Larry, it was for defective return, not for last date of filing of return. Because what is happening, we just read this chapter today and I'm start asking MCQs questions. So did not revise the provision, not even gone once again. So you are not able to recall all the provision right now. The correct answer would option number B. Not even A, because it is saying before completion of assessment. So whatever is the date for completion of assessment, you have to take 1 day off before it. Because on 10th, it has been completed. So you cannot file return up to the date of completion because the word is before completion. So if the order of assessment has been passed on 10th of December, that means before that date, the date would be 9th of December 2025. After communication 15 days, Lahari is for defective return. Why are you writing this again and again? So the correct answer is earlier is 2025. So always remember the communication date is for to make you confused, irrelevant. The date of completion of assessment was 10th December 2025. So that 1 day before that date you need to take. Fine. Whenever you do mistake, you always remember it. Correct. Moving on further. For previous year 23-24, assessee has suffered a business loss of 3 lakh. His income from other sources 1,30,000. His due date of filing was 31st of July, but he filed ITR on 19th October 2024. So this question has been framed for previous year 23-24. Why I did not framed it for 25? Because these date does not come yet. So for the purpose of understanding the question, I have framed this question from the point of view of previous year 23-24 and assessment year 24-25. So the concept will be remain the same. Because if I'll write it down 19th October 25, so that days are yet to come. So that could be a confusion. So what is the correct answer of this? Question number 12. What is the correct answer? Rashmi is saying C, Aisha is saying B, Jigna is saying C. So because you filed your return after due date, clear? You filed your return after due date. So you cannot carry forward it, but you can set off the loss. So this 1,30,000 can be set off from the income from other source income. So can set off 130, but remaining losses cannot be carried forward because the due date has been gone. Clear? Almost same kind of question for you. But there is a interesting thing. For previous year 23-24, now the loss belongs to income from house property. And in case of income from house property, you can carry forward the remaining loss even if return has been filed after due date. So the correct option is C, can set off and can carry forward also. Under PGBP, he could only set off but cannot carry forward the losses. Now for previous year 23-24, assessee had suffered a business loss of 1 lakh. Carry forward depreciation was 160. His due date of filing of return was 31st October and return has been filed on 12th December. A business loss cannot be carried forward, but a UD, that is called current year unabsorbed depreciation, UD can be carried forward. So like income from house property, the unabsorbed depreciation also can carry forward as same in case of loss in case of house property. A person can furnish an updated ITR if, point number 15, what is the correct answer? Option number D. Whether or not you have furnished your ITR section 139.1, 139.4, 139.5, etc. Does not matter. You can always file your updated return. The provision of section 139.8A shall not apply in case update is a loss return. So we cannot. Now if you will see that option is correct, that you cannot file update return if there is a return of loss. So you cannot take on option number A because there could be other option which is also relevant. Has effect of decreasing the tax liability. This is also inclusive. Result in refund or increasing the refund. That is also a case. So now according to this, which shall be the correct answer? Option number D would be the correct answer. Well done. X finds some omission in the ITR filed by him on 5th July 25 for assessment year 25-26. He wants to revise such return. Can he do so if no assessment has been done in this case? X can revise this ITR up to, we all know the option number A would be the correct answer. 31st December 2025. Fine. Last question. X finds some mistake in the ITR filed by him on 15th October 2025 for assessment year 25-26. X Limited wants to revise such a return. Can he do so for no assessment has been done in this case? X Limited can revise the return up to, correct option is option number A, of course. Okay. So those were our MCQs. As I told you earlier also, this chapter belongs to theoretical provision. Most of them are procedural requirement like transparency provision. The all technical provisions regarding the filing of return, compulsory filing of return, belated, revised return, updated return, that's everything we have discussed. Fine. But the provision regarding PAN number, transaction required to be for submission of PAN number, Aadhaar number, linking number, you have to go through with yourself. If there's any query, definitely I'm going to solve in the next class. So we have 2 class left. One is day after tomorrow and after that on Friday, in which we are going to discuss the provision of unit number 9. That would be total income and computation of tax liability. And again, as I asked you on the Friday class, it's a request from my side. Please revise the basic chapter, rates of tax provision, surcharge, rebate provision, and I've asked you to revise your capital gain provisions and of course PGBP. Even if you are not going to revise capital gain, that would be okay, not an issue. But please revise the PGBP and the rates of tax provisions of basic concept. That is going to help you a lot in the questions of total income and tax calculation. We are having almost 12, 13, 14 huge questions need to be solved. Test to knowledge question, almost 12 test to knowledge questions and 2 illustration. So we are going to solve each and everything. In the unit number 9, there is nothing much for discussing because those are the revision process of all the chapters we have discussed. The new topic in chapter number 9 is AMT, that is alternate minimum tax. Everything else we have already gone through, and there is a topic also which is salary structure, how to plan your salary structure. That is also a theoretical provision under the chapter number 9. Everything else is going to be numerical because that is a summarized of all the kind of question we have to discuss, including deductions, TDS, PGBP, capital gain, income from other sources, everything has been included in those chapters. So please revise it before day after tomorrow class. That would be really helpful for you. Barna Mandal is asking, sir, weightage of this chapter. Okay, I will write it down according to myself. What are the weightage of almost these chapters one by one? And I will share that sheet with all of you in the class day after tomorrow or at the last class. Okay, so do not worry. You just need to do one thing. Just work hard. And I told you success will be your slave. So have a good day. If you have any query, you can ask me. Otherwise, we are going to close the session. Kiran is asking, sir, what is the difference between revised return and defective return if there is any mistake in return filing? So if you are able to find your mistake, so you can revise the return up to the last date of filing of return. But if you are not able to find that mistake and the department will find some mistake, and if they ask you to rectify, that is going to be called defective return. Okay. Nananda Gopal R, yes, I will upload these MCQ on the portal with answers. Do not worry. Any other query, students, you can ask. I have also already uploaded income from other source, notes support, the deemed dividend part and the other part also. I have also uploaded the TDS provisions or this chapter notes. Of course, I'm going to upload it today. Do not worry, you can download it from the portal. So I guess there is no more query regarding this. So Mr. Bhargav, can we close the session?